on, everyone? Welcome to the Stock Market Morning Prep video for Tuesday, July 14th. Interesting day. We had an agreement, at least a tentative agreement from Greece yesterday, and I mentioned that in the video. We gapped up tremendously, and pretty much that was most of the gains, probably 95% of the gains. Here is a 5-minute chart of the ES without the pre-morning data, and as you can see here, we were in a range all day up until maybe the end of the day. We had a little bit of short squeeze, not much opportunity out there if you're trading the indexes. Very, very quiet. A lot of people I hear in the pundits of CNBC and Bloomberg, and oh my God, we're rallying 290 points and we're up this much. And you look at it, I just shake my head. I'm like, there's nothing here to even tell you other than what had happened when we gapped up at the opening. So nothing going on here yesterday, which is interesting to say the least. Now we're holding pre-market gains here. We're down about $1.25 in the ES. Really, that's a good sign that we are holding all of this gain going into this morning's trade. So it'll be interesting to see what happens here. I do think that I would suspect that we get a little bit more push to the upside, maybe a little bit more probing, probe the buy stop, the stops that are in place right now. And let's see where we could take them, take these stops out. Once the stops are done, then I think that they're going to run them up again. And then I think then we would be looking for some further weakness. And that might happen going into next week. So we could get a lot of this choppiness price action with no movement, a little bit of movement until options expiration is done. So just want you guys to be aware of that. I know it kind of stinks when good volatility is coming, and the next thing you know, it just kind of dies again. So we'll see what happens. But, you know, again, let's be on our toes because anything can happen. Somebody asked me yesterday, Mark, you know, looks like China's back on track again. And China needs a lot of work. And you can see just in the chart here, this is just a horrendous chart. And you can see the gap down every single day, down 2 points, 2 points. And we did gap up a couple of days too. But all of these gaps are not a good sign here. They're all going to be filled eventually. And what it's really doing is just back testing this 200-day moving average, guys. So China needs a lot of work, and I still think that China is in big, big trouble. Just finally, China's coming out trying to protect their market when we were saying about a year ago, maybe even a year and a half, that things don't look too great over in China. There's cities filled with unoccupied residents, and they just continue to build and build and build with no one there. So that's a bad sign. Then you get the stock market involved, and that just gets even worse. So again, China needs a lot of work here. This is not even far from being over. XLI, another reason why I'm saying is 30% of the S&P 500, the industrials. It is now back tested, but I had this hourly chart of the XLI broke this area. 55.20 is the neckline, and we're going to come right around that 52-ish area. We may have even hit the target actually. Let me just run that. We're not there yet, close, but that's it's pretty damn close for government's work, if you will. And now we're back above it again. So let's see if we get back above it and we start to make higher highs and higher lows. Then that might be also a very good sign as well. A lot of the indicators that I don't have enough time to show you, they are rolling over. They're starting to just briefly just kind of turn up a little bit and maybe pause. Maybe, just maybe, we might have a little bit of continued push higher. But again, anything could happen here, guys. Remember, anything could happen. News trumps the charts, no question about it. All right, so now what's happening here in the Spiders Daily? We're back into this ascending triangle from way back when, back from late February. And now you could just see this, just tons of chop here. Down, back up again, down, back up. We gapped up now, so this gap's going to eventually need to be filled as well. You can see that we're at 35 in the RSI, so we are oversold here a little bit, oversold in the MACD. So logical would be that dead cat bounce. Now remember, if we start to chop around here, go higher, and start breaking out to new highs, then we may have something going here to the upside. But until then, the market still needs to prove itself. IWM, same thing. As you can see here, another big gap up that'll need to be filled as well. And we're back into this horizontal consolidation here. So very, very choppy price action for 2015. And I would suspect that we're going to have a pretty good end of third quarter and definitely good fourth quarter of volatility, which means money. because that's going to give us some opportunity here. So I do think that in the next several weeks we should start getting into some really good volatility. Now, remember, there'll be a quiet period because August is really a quiet month of trading. But if there's any kind of fireworks in Europe, that's going to help the volatility as well. So let's just stay on our toes again. Here's the transports again, gapped up a little bit, but all it's doing is just back testing this back end of the range here. Again, the price target here to the downside will be the 136.98. Call it 137. And diamond, same thing, gap up here, back above the 50, which is good. It made a good effort. The market has made a very good effort here. So we just need to see how this is going to work out here, okay, in the coming days. And remember, guys, when you have these stops up in place here, shorts need to cover just in case. And we have some stops that are right that were ran into late in the close, 2091, 2091 and a half. And then I think you have a bunch of stops up at 96, 2096 in the ES. That'll push the market right into the 2100 area. Could happen today as well. So let's just keep in mind. Me personally, I'm going to be a cautious buyer of a decent pullback. If we're shallow pretty much all day, we're just going to step aside and let the market do its thing. But if we can get a little bit of movement to the upside, then I would suspect that we would be looking to probe the stops, the algorithms, and then it'll give us some more movement to the upside. Lastly, here's the cues as you can see here. So not a bad day yesterday if you were long. If you came in flat, you really weren't doing too much. But remember, guys, looking for probing, continue probing to the upside. Let's see where we go from there. And I'm looking for some sort of like a bullish finish between now and the end of the week in options exploration. Have a great day, everybody. We'll speak to you tomorrow. Take care.